Is it going to be a consumer-led recovery?
Absolutely, Matt. I think, one of the main things coming out of the recovery, as I mentioned earlier, is that we do have quite a bit of pent-up demand in the UK. We're seeing it in the retail sales data. April retail sales expanding by nearly 10% month on month. And we expect that string of data to continue. This will be initially led by a consumer-led recovery. As I mentioned before, we have £200 billion in excess savings built up over the last 12 months. However, we do think that baton will be passed on to businesses as the recovery goes firmly into Q2 and Q3. Businesses, especially large corporates, have built up those excess savings as well. We think around £150 billion. So some of that will be spent. Fiscal policy has been more accommodative than we thought, given the spring budget. Incentives to really bring forward CapEx are there. And we do think some of those large corporates will take advantage of that in the next few months.
Do you expect to see growth accelerate as we progress through 2021? And of course, we have a full reopening of the economy. What's that going to mean then for inflation? We've been talking about it everywhere else around the world, in the United Kingdom, and then also for some of those policy settings, particularly when it comes to the monetary policy settings.
Absolutely, Matt. I think that's the million-dollar question. We've spent a lot of time here at DB thinking about inflation. This is going to be one of the most defining topics of the post-pandemic era. We're seeing what's coming out of the US, obviously yesterday and last month. Clearly, this will be one of the most important readings that we get next week with the UK May inflation report. And maybe I'd say a couple of things here. First, expect higher inflation in the UK and expect inflation to go above the Bank of England's target, which is at 2%. Everywhere you look, surveys are telling us that much. We are seeing some of those demand-supply imbalances lead to input shortages. And subsequently, we are seeing input prices rise. So expect prices to rise over the coming months. And the second thing I'd say to your point on monetary policy setting, I think the Bank of England, who has the eye of the market at the moment, especially when it comes to potential rate hikes as early as next year, potentially, may be underestimating how high inflation could go. So peak inflation, I think, could be moving closer to 3% rather than 2.5%, which is what the Bank of England is expecting. I think it's very easy to underestimate some of these impacts. Energy prices are soaring, commodity prices are up, and expect firms to try and maintain some of those margins that were likely compressed during the pandemic. The last thing I probably want to say is expect much of those price pressures to fade as supply catches up to demand. So this is a story that we're hearing not just from the Bank of England, but from other central banks like the ECB yesterday, like the Fed as well. But we do think that some of those price pressures could prove a little bit more persistent than I think central banks are giving it credit for. Everywhere we look, especially with the labor market data, we're seeing some of those vacancies rise, some of the job shortages coming through. And of course, wages are picking up amongst the lowest paid earners here in the UK. And I don't think that's a very dissimilar story to other parts of the globe. So inflation is certainly something that we should be keeping an eye on. But unfortunately, this debate of whether UK or even global inflation is transient or persistent, or indeed a little bit of both, won't be answered this year. It's going to take some time, and we're going to have to be a little patient. As I said, this perhaps may be the defining theme of the decade.